Good afternoon. This is Todd Horwitz coming here from the floor of the CMU in Chicago. And as we look at track soybeans, what do we see? Well, we see a little bit of a rally, but in general, the sell-off continues. We're really in this big old congestion range, and of course, we'll call this the trade war trauma. But of course, we're not really in agreement that there's a problem with the trade wars. In fact, actually, I believe that this will actually benefit farmers and producers because of what's going to happen, because China can't do without us, we can do without China, and there's a lot of problem. And the bottom line is we have a consumable commodity like food. It's got to be used, and there's going to be a demand for it. There could be a little rough spot in the middle, but as we've noticed since the big announcement came, we're much higher than we were when it happened. So now we're really just stuck in this consolidation range and working on seeing a little bit of selling pressure here over the last couple of days. Again, a little bit of a rally here. But we're looking at the $10 level as a spot to step back in and look for a run. And we look for potentially to see new contract highs at some point during the season. In fact, we are actually looking for a potential big market in the grains as we look for a possible sell-off in equities, which would actually bring a lot more new money into the grain space as well. So we like soybeans here. We'd like to see them come down to about that $10 level. They're really in a range right now of about 10.05 to 10.60 or so, but that we are on the lower end of the range with a small little rally. So look for a pullback to 10, look to be a buyer there. That's the way I see it. This is Todd Horwitz coming here from the floor of the CMU Group in Chicago.